Hi, good evening. Today is July 20th. S&P 500 erased yesterday's drop completely today, and we have closed up 1.5%. As Monday looked very gloomy after 1.6% down, today is the exact opposite. We got lucky on our prediction Friday saying that we should not be buying the gap down on Sunday because the drop could be a lot larger than we had on Friday. And like Andy was saying, that turnaround Tuesday is a much likely scenario. And so we got that, and what a turnaround it was. The market pretty much was going up today in a straight line with basically no pullback since the open. And the whole Monday sell-off has been reversed. All indices were up hugely. For example, Russell was up 3.25%, which was, I guess, expected after 5 down days. And since the low, we're up around 4.5%. So we, as you could see on Russell, we have that support line that around 2120 that held. It has been trading in this range for a while now, since pretty much almost the beginning of the year. We had that trading range. As other indices were making new highs, Russell has been trading in the range, and so that range held more or less today after breaking it below it just a little bit. And so as long as that level holds, we're likely to trade in that range, to continue in that range. But if that level breaks, then it's going to be a lot more ominous for Russell. The sell-off on Monday was mostly caused by the fears that the growth is slowing because of COVID and all the new lockdowns being implemented because of it, potential lockdowns because of it. But so far, White House denies any potential lockdowns. They're not implementing any new mask mandates, even though the recent news is that Nancy Pelosi has COVID and some of her staff members have COVID, even though they all have been obviously vaccinated. And one of the data that I saw online, and again, it's very hard to get reliable data, that in England, either 40 or 60%, depending where you look, of people who are vaccinated, who are hospitalized because of COVID, have been vaccinated. So roughly half of the people who are hospitalized because of COVID in England are vaccinated. So to me, that doesn't really bode well for the efficacy of the vaccine. Back to the markets, if you look at S&P 500, the rally today really shouldn't be that surprising because we have been oversold pretty much on all parameters by Monday close. And for example, one of the indicators that some people look at is CNN Fear and Greed Index. It was around 16, with S&P 500 down only 3.5% of its highs. So the amount of fear in the market is incredible.
Also saw a really nice bounce of it. VIX was up over, I want to say like 6 points yesterday at one point, and came off those highs and then reversed pretty nicely today, but it was up quite a bit. The highest that it's been since May for a brief moment. So.
Right. And so, after the sell-off on Monday and a complete rebound today, it's a lot more difficult now to see what is next. For me, at least, it's a lot trickier what is next. It's if we look at the daily S&P 500 chart, you could see that every other sell-off was almost a V-shaped rebound, where we really, well, the last one for sure, we didn't really test that lows again. And so we also tested that moving average that we discussed as well, the blue line moving average on the chart that we discussed last time on Friday. That's exactly what was the bottom for Monday. And so now what's next? It's really hard to say. And I could easily see if we break today's high, we could go to new all-time highs by Friday as well. But I wouldn't completely rule out just chopping around in today's range just to see where we stand. So I'm not gonna make any predictions for tomorrow. It's not because I just simply don't have anything to add. But the levels that I'm watching is 42.80 and 42.90. That's the vol trigger level. If we were to sell off, that's, I would think, where the buyers would come in and to trade in the range.
Right.
But, needless to say, if some chance we break the lows from Monday, that's not going to be good. But I think the odds of that happening are low. But I think odds of just chopping around are much higher, or even making new highs than the complete breakdown here.
One of the things that was interesting to watch was crude today, where it was sort of all over the place. And I mean, not as big a range as yesterday, of course, where it really collapsed, but it was up for a bit. And then at the, toward the close, it for previous day is down quite a bit and pretty much flat for the day. But most of the energy stocks were up pretty nicely today, rebounding along with the rest of the market.
But also, let's look at bonds. That was another interesting situation. Every time bonds make new highs, then they reverse, only to make new highs again. And so yesterday, bonds made new highs, and it seems that they completely don't care about any inflation, like we've been saying.
Right.
And today they have reversed again. So will that kind of pattern continue?
There's a big gap here, though. Is not that bonds tend not to, fill gaps as readily. You got a lot of, gapping action back here, and this anyway is TLT. You have to look at the futures, but there's I don't know. If the inflation thesis is alive, then it could reverse here. And there was a lot of from some of the people that I know that trade, quite a few traders were going short today, short bonds today. Whether or not that's a good position, I'm not recommending it. I'm just saying there were some people that I know that were going short bonds today. So there's a chance that it's reversed, but it wasn't a very strongly convincing reversal like what we saw in the stock market today. So.
And it was interesting that on Monday, Biden has admitted that he spoke to Powell about the independence of the Fed. And so today, after the independent Fed, we had an independence rally. And obviously, the Democrats want to pass that infrastructure package, the bigger the better. So it wouldn't look good if the yields were too high for them, So now the yields are not that high, and so they could keep adding more new debt without repercussions, so it seems.
Right. What could go wrong, right? So
exactly.
Yeah, it's sort of the bond market's been very hospitable to the Fed and to deficit spending, despite the fact that it's been, since COVID started, it's been a huge amount of deficit spending. So it probably won't continue forever, but how much longer will it continue? That's a question.
Meanwhile, all over Europe, there were protests against those vaccine passports. Vaccines were protests were in Greece, France, like we've discussed. England also had huge protests after they have announced that it has to be mandatory to have a vaccine to go into a crowded venue. Even a negative test is no longer enough. And they announced this no less on their Freedom Day. So it's kind of ironic, just to say the least. Freedom Day is when you make stuff mandatory, apparently. But at least in France, it seems like Macron backpedaled a little bit and said that only for large malls would you need to have vaccine passports, but small shops are okay. So at least it's a small victory.
The crypto, though, did not play along really. It was down for the day, and we can look at some of those charts like Bitcoin broke below 30,000 late last night, and it stayed below that level. And I'd say it's in a pretty bearish place right now. At 30,000 more of a psychological level. I'm not sure that it's really the technical level that people think it is, because really some of these bottoms were more in high 20s, maybe. I think this actually did touch 30, but it did go down to the high 28,000 range. And some of these, there were some lows back here in January, where it made its first thrust stop to, it was about 41,000, something like that, and then pull back to, and it was like 28,600, something like that. I don't know the exact level, but that was that level, 28,700. So that level, what I think is the more important level. Some of these places where it tapped its 50-day moving average, went a little bit lower than that, and then the high 28,000s. So we're very close to that level. And I think if it were to break 28,000, then we could see a fair amount of selling, and it could get down to high 20s or low 20s from that place. I think whether it taps 20 or not, there are some of the bears, they say, well, Bitcoin needs to sell off to hit its previous high or something like that. But I don't see why it has to. It doesn't have to do anything. But there are some people who will say that they'd like to see that as the confirmation of bull market, or confirmation of a new bull cycle, that it would tap its previous bull market high. But it doesn't have to do any of that. There's no magic about that. It could crash below 20,000 and go to 16,000 or something. And so I wouldn't count on these this kind of conventional wisdom that you hear a lot, which it doesn't apply in regular markets. It doesn't really apply in crypto, because who would have thought that if you were in January 2020, who would have thought that the stock market would take a 40% nosedive just 2 months later, even despite the fact that crypto, or that COVID was starting to become publicly known, or that crypto would fall by 70% from its high. So it's none of these things were even considered possible.
And it's amazing the distortion that I was just mentioned, that the fear and greed indicator, which was pretty much at the same level it is right now after 3.5% sell-off, that's the level it was after COVID at 40% sell-off that we had. Right. So it's interesting how the option market, it's a big part of the fear and greed indicators, the options market. So it's interesting that distortion is just a little confusing to me.
And it's I don't think that when people look at VIX, and they'll say, well, VIX is at a very low level, but I'm not sure the VIX level itself is as important as the percent changes that you see in the VIX. Because there's other reasons for the VIX being where it is, like interest rates and so on. That's a big component of the VIX level, because of how options are priced. But I would just say I'm watching this closely. I think that there could be a reason to, if you want to hold long-term positions, to hedge your longs with short positions. But I'm not shorting it yet. It's just it's a very precarious market right now across the board. But maybe on the downside, I think there's a real risk below like the 1700 level, and then which it didn't really break. It did go briefly below that back here, but it didn't really break that before. So maybe 1650 is the important level for Ethereum, but for Bitcoin, it's more like the mid 28,000 level. But on the other hand, the thing I would point out is that the stocks like Coinbase, which is down now a little bit after hours, it was up pretty nicely today, and it was up, yeah, it was up pretty nicely, rallied along with the rest of the market, a little bit more than the rest of the market. But there were some others like Galaxy Digital and so on that they they opened down and then they reversed back up and actually closed up. So if these have been sometimes leading indicators of a change in trend, and so it's possible that they're pointing to a rally, but that rally clearly hasn't materialized yet, and we've just not seen. I'm not seeing right now the signs of, well, it could be a positive thing. I've not seen the signs of, that there's like buyers that are trying to conceal their buying interests, and so you would tend to see spikes up, especially late and so on, and not really seeing that. But on the other hand, what is that type of activity? It could be buying, it could be short covering or something like that. It could be a lot of things, and it could also be I would just say that right now I don't see a lot of hopium in the crypto market. I don't see a lot of reason to say, well, there's these factors. I mean, there's a lot of fundamental positive information that is pointing to that it could rally and it could be supported by fundamentals, but bear markets ignore the fundamentals. That's just like bull markets do.
Okay.
So I am not willing to call a bottom just on the basis of that, but I do think if we were to see, what we haven't seen in either Bitcoin or Ethereum is a real solid, even as we saw back here, these failed rallies, we haven't seen a solid 2 or 3 day rally in a few weeks. Right. And if we were to see one and it's able to break back above these levels, then it could be kind of game on again. But that's the type of thing that would be needed at this point to really change the trend. It's what's killed. We're looking at Bitcoin right now. What's killed it is these brief rallies that then are just quickly sold, and there just doesn't appear to be the buying interest as it's dropping, and that's been killing it. But on the other hand, on a big stick down like this, it could be. I would give it at this point like a 25-30% chance that we could reverse here. It's just not a good probability. I'd say it's more likely that it'll continue to drip down or maybe bounce around here for a little bit. But unless something changes, what could change the trend is, I think, if the market, the stock market, and regains its footing, and bond markets reverse a little bit, and the dollar backs off a little bit, then I think we could see a return of some confidence to crypto. But as some of these macro factors are what's driving this sell-off, is just total risk off. But I think if all these sort of things happen, I think that's what could lead to a rally. But none of those things are true right now. We've seen what could be a reversal on bonds, but I wouldn't say that's necessarily what's happening. And so that would need to happen. And I think that the dollar rallying has really been a killer for crypto. You see it topped out or bottomed out here right around the time that Ethereum topped out. And the move in the dollar is a lot less than the move in Ethereum, but still it's been a headwind pushing against all of crypto, and so this was up today. So So if this were to reverse, then that it could change the game for a lot of assets, a lot of stocks and commodities, but as well as crypto. But I think it's pushing against it right now.
Right. And what's also interesting that people kind of don't care about crypto being green or not green when all of those space rockets are going to space. You know, just one flight, Bezos trip alone probably used so much carbon pollution that an average whole life of an average person. And they want to mass scale them. And we all now apparently celebrate trips of rich people going to space, whether it's Virgin or Bezos or Musk. Everybody wants to go to space, and I'm like, I'm fine with this. Sure, go for it. But then, just stop complaining about carbon pollution, because it seems like, when an average person drives his truck to work to repair something and back, or to the store to buy something to build for his own home, now that's carbon pollution. We should deal with this. You're not allowed to use gasoline. But when rich people go to space, now that carbon pollution is okay, even though one trip alone is just an obscene amount, more than an average person uses in their whole life. And same goes for their private jets, obviously, which they use to fly to all sorts of green environmental, global warming conventions. This.
When they all fly to Davos
Right.
and
To
they
discuss
preach to
global
us
warming.
about ESG investing and so on, and have conferences there, side conferences on ESG investing, and yet then they fly back in first class or business class. But still, it's it definitely is. It seems inconsistent. But it's very exciting to watch these things. This stock, though, this is Virgin Galactic that we're looking at here, and it was up yesterday. I think that was along with the launch of Blue Origin yesterday, but then it was down today. But it's off its high by almost 50%, a good 40 some odd percent, right?
Right. It made $50 after our high, so pretty much 50%.
Right. So I would just say with crypto, it's the bull thesis might take a little bit longer. It's not there yet, but there could be given this negative action, there could be a good buy point coming up. I just don't see it yet. The one thing maybe I would add, if you are looking for a crypto opportunity, it's actually a stock, and that is Mike Novogratz's firm, Galaxy Digital. They hold an 18% stake in Kraken, which is one of the major exchanges. And Kraken has been valued by VCs at something like 20 billion, which that might be too high, because that was a full market valuation, or back May valuation. But let's say that it's worth only 10 billion, then that would still put that 18% stake at a $1.8 billion value. But the whole market cap of this is, well, it says it's 3.8 billion. I think that's a little high, but let's say this number is right, 3.8 billion. That's still, it's trading at that asset alone. It's trading at a little bit of a premium to that asset alone. And they've got Bitcoin mining, they've got investment banking. They're invested in 40 or 50 different firms in the space, and so it's undervalued compared to the what its market compared to what its underlying asset value is. So it's rare that you see a crypto stock that's undervalued on a book value basis, but this is one of them.
Yeah, and then the chart looks good for a potential reversal. Yeah, interesting idea.
And trades as an ADR, so it's got this funny symbol, but they will probably go onto Nasdaq later this year through some kind of SPAC conversion, but right now they're on the Toronto Stock Exchange, and so they trade as an ADR in the US, which is part of the reason for the inefficiency. Some funds can't trade ADRs or some of these other other types of assets. So that's part of the reason it's undervalued.
All
Thanks,
right.
everyone.
Thank you. Have a good day. See you all Friday.